Okay, for the second last panel of the day, I would like to invite the panelists to come in front, but I would like to introduce the moderator for this panel. The panel will be on unleashing SME potential in Africa, and the moderator will be Jeremy. Jeremy is the CEO of INP, a company that supports small and medium-sized companies in sub-Saharan Africa to generate economic performance and social and environmental impact. In 2020, he leads a team of around 180 professionals and is located across 10 countries in Africa and in Paris. Prepared to fund around 40 African startups and SMEs per year. So welcome, Jeremy.
Thank you very much. Can you all hear me? Hi, good afternoon. Thank you for joining. Well, I suppose you are attending this panel for a reason. And maybe if you are attending for a reason, you don't need to be convinced that SMEs have a key role to play in the growth that we all hope to see accelerating in Africa. Not only an acceleration of growth in macroeconomic terms, but also a more inclusive growth and a more appropriated growth. And for that to happen, there are not that many options. The continent needs a stronger and a more dynamic and more diverse fabric of local SMEs. And for that to happen, many changes still need to occur in our financing industry. So welcome to this session. That's what we are going to discuss. How can we all be actors that unite their forces to make this change accelerate? And it is a pleasure to be facilitating it. My name is Jeremy Heidenberg, and as was explained, I'm co-leading Investisseurs et Partenaires, INP. INP has been one of the pioneer teams in funding and supporting in many ways African entrepreneurs in sub-Saharan Africa. Over the past 22 years, we have supported around 250 SMEs and startups at various stages of their development. And we are particularly active in West Africa, Ghana, Côte d'Ivoire, Senegal, Mali, Burkina, Niger, some of these countries where you don't meet investors every day, all the way to the east to Uganda, Kenya, and Madagascar in the Indian Ocean. We do it by investing in companies directly and by running a sponsor fund of local funds and funds of funds. And I would like to introduce the panelists who all have different contributions to the theme of supporting SMEs on the continent, hence a diversity of points of view for this panel. I'd invite each one of you to simply raise your hand as I say your name, so the people in the room know who's who. Grace Beria, you are an associate director at KPMG, and you are serving as the program director for the MasterCard Foundation Fund for Resilience and Prosperity. So you're bringing over 14 years of experience in project management, consulting, and financial audits, and you're going to explain to us some of the perspectives of the Fund for Resilience and Prosperity. Gaëtan Herrings, you're an investment director at Fitrust, and you have previously been managing investment at BIO, the Belgium DFI. So you have a large scope of experience in sustainable investments and in supporting businesses with social impact. Janice Johnston, you're the CEO of Edge Growth Ventures, and you have 2 decades of experience in venture capital and private equity. And you have led impact investment across sectors with environmental and social returns. Thank you again. Catherine Young, you're the CEO of Greenstone Ventures. And you have extensive experience with the Deloitte, Chevron, and SAP. And you have a vast knowledge of Africa's entrepreneurial ecosystem. and you've built, you were explaining to us earlier that you've built a range of solutions for entrepreneurs at various stages of their progression. And Mikhirsha, you are not an investor, but you are the founder and CEO of Africa Specialty Risks, looking at provide solutions to investors to de-risk their investments and therefore facilitate more investment to more SMEs in Africa. You have a background at AXA Africa Specialty Risks, and at Barclays Investment Bank and Macquarie Capital. Thank you all for your presence. And we hope that the diversity of this panel will bring you diversity of end goals. So in no particular order, I'm going to ask each one of you 2 questions. So you can try through them to take 5 minutes each to bring your perspective. And so we hope to keep 15 minutes for questions from you. So Grace, in your role with the MasterCard Foundation Fund, how have you seen resilience-focused financing impact SMEs in Africa, especially in vulnerable sectors? Why is your fund called Resilience, and what does it bring? And what are the most effective mechanisms you've seen or implemented to provide not only capital, but long-term capacity?
Okay, thank you, Jeremy, and happy to be here. So the MasterCard Foundation Fund for Resilience and Prosperity is a $126 million fund that will be implementing in 3 sectors. That's agriculture, climate impact, and digital economy. So this will be across 20 countries. And I think, tying back to your question in terms of resilience, this program, this fund is actually coming off the back of a very successful 8-year fund where we had worked with SMEs, businesses as well, that were aiming to create financial products and services for smallholder farmers or for the rural poor in sub-Saharan Africa. And some of the lessons that we learned, we've actually picked into the new program. So one of them is, the importance of challenge funds, because challenge funds offer, that patient capital that allow businesses to either test out their business models, or if for those that their business models have already worked, they're able to scale them. So either to new geographies or to new customer markets. And given SMEs, form a significant proportion of businesses in Africa, some statistics have said 90% of businesses in sub-Saharan Africa can actually be categorized as SMEs. So, if that's the case, imagine the potential on the GDPs of these African economies if these SMEs were actually to scale and grow and actually be able to create not only economic impact, but also social benefits in the communities in which they operate. So, that's why we structured the Challenge Fund, because by providing this grant funding to SMEs and giving them that period to create that impact and also benefit the business to enable them to scale and grow, it means that, because at the heart of what we are looking at is employment creation for young women and men. So not only would the businesses be able to benefit, but would also get to unlock that social benefit of employment creation for young women and men, because unemployment is a significant challenge in sub-Saharan Africa. So in terms of resilience, that grant funding allows them that period to scale and grow without having to think about return on the investment that they've received. And in addition to that intervention, would also be providing technical assistance support to the businesses, because we look at the challenges that SMEs face across Africa, what's preventing them from growing, what's preventing them from creating these jobs. It's access to finance challenges, access to markets, lack of an enabling business environment, lack of that sustainability, in terms of then accessing and unlocking other commercial investments, equity debt, and any other structures. So in addition to that, technical assistance would also support the businesses with connecting with investors, commercial investors, such that even post our FRP support, then these businesses are also able to continue operating and scaling their businesses, so that then these jobs that have been created for young women and men are also sustainable.
Okay, great, thank you very much. So mechanisms include a combination of grants, technical assistance, and connections.
Yes.
To unlock the potential of growth of these companies, therefore unlocking the job creation and their social impact.
Yes, and one last one is convening and influencing, where we're able to bring them together with stakeholders that can actually support that enabling business environment.
So through connections with governments, public administrations?
Yes.
All right. So advocacy role as well?
Exactly.
Okay. So that's an ambitious combination. Turning to you, Gaëtan, at FitTrust, so Grace just told us on how she sees the synergies between unlocking growth and unlocking social impact. We impact investors often get asked how to balance the two, the growth and financial performance objectives and the impact objectives. At FitTrust, how do you see this combination? Do you think there's a trade-off between the two? Or to what extent do they complement each other? And with this in mind, are there types of SMEs in Africa that you would target as a priority?
Yeah, thanks for the extensive question. I will try to answer the best way I can. So I think as any investor, we would want to have an alignment of interest between basically the impact you try to create and the success of the business, because otherwise there will be anyway trade-off. But if those two are not aligned, then you are in deep trouble during the road that will be bumpy. But even when they are aligned, let's say smaller farmer sourcing, you process, you sell what you process, you should expect that basically the more you sell, the more you will source, and therefore the more you can pay potentially a premium, buy more volume, create more stability in demand, good for the farmers as well. But even though that happens, and let's say you have alignment and interest on that front, there will be always trade-off. And the way we answer it is basically understanding before investment, how did the sponsor was already exposed to that kind of trade-off? Which trade-off did he saw or did he see? And how did he handle it, or he or her handle it, he or she handle it? And then based on that, we try to come up with new trade-off and see how he think or she thinks about it. Because no matter what, those will happen. And then define in your shareholder agreement or in your loan agreement, why are we joining forces? And I think that's also quite a habit I took when I joined BIO a bit more than 10 years ago. As DFI, we always had that approach, and I think it's very institutionalized, and maybe more, let's say, a private investor should learn from that. And then your second question about how to, as a company, how to get traction as a potential impact investee. Basically, at the moment, politics drives a lot of the agenda. So you have youth, women, bottom of the pyramid. Those are the three main targets. And then you have climate, biodiversity, and so on. So those 4 dimensions would be, I would say, the 4 dimensions which I would go and try to see if my business within my stakeholder, being client, supplier, employee, whatever, do I have impact on those stakeholders, on those subset of stakeholders, and if so, clearly position it as such, and define what is your goal with regards to your impact to those stakeholders. And that could be it.
Great, thank you very much. And so there comes innovation, and I'm turning to you, Janice. So you have a good background in venture capital. So when identifying, I wanted to ask you, when identifying innovative SMEs, what are you prioritizing? What will you be looking for in terms of innovation for growth potential? And therefore, how do you see venture capital playing a pivotal role?
Thank you very much. Obviously, pivotal questions for us. So as mentioned, we lead the team at Edge Growth Ventures, which is a fund manager into SMEs for the last 15 years, mainly based in South Africa, and currently we run over 7 funds. And why that's sort of relevant is that we're actually positioned across the capital spectrum and equally across the development spectrum. So we're involved in various touch points and various different types of SMEs. But in our cohort of venture capital investments, of which we've done a number, I'm sure that the usual factors apply in terms of what are the strengths and key criteria for selecting those. But I will highlight a few that we've seen to have more significance as we grow, and particularly within the context of Africa. So, well-versed in terms of market dynamics and market trends in order to invest in SMEs that are positioned in markets that are going to be growing. So they've got some real tailwinds within the business that they can support and solving a problem that needs to be solved by an extensive number of people. But what we've seen, and I can give a good example of this in one of our investments, Pineapple, which is an insurtech business within South Africa, is that it's about understanding the segment of the market that you're talking to. And so in that particular investment, it was really focused on more a youth segment within the broader insurance context. And there was real opportunity. So we're wanting to unpack what are the fundamentals of that business that's going to speak very specifically to their target audience that will enable to grow that adoption curve and the recurring revenue faster than the average. So that's a key one that really does also play into the value proposition and interrogating that even further in terms of the market positioning, such that we feel these are businesses that can grow and scale into other markets. And that's often a real challenging aspect of SMEs within Africa, because often when we're sitting here, we see Africa as one sort of globular geography, but it obviously comprises very different markets. And in order to get the kind of VC scale, you need an addressable market that invariably is greater than one particular jurisdiction. And so you have to understand what are the aspects of those transactions that can unlock scale and growth beyond the particular borders. And that is not an easy question to get to, and through the myriad of SMEs that we're screen and select, there will only be a handful that meet all those criteria. And the other one that's becoming increasingly important, even though we knew it before, is the team. And getting that complementary set of skills, particularly on a tech basis, and having a strong technical founder that is able to do a lot of the heavy lifting, particularly in the early stages. So I would say those are sort of the three. Obviously, we could have a whole discussion on this much further, but I think the interesting dynamic, the question of what does the VC company bring, or the fund manager, to really facilitate this innovation. And that's a very key question for all of us to look ourselves in the mirror and say, okay, yes, we bring capital, and that's important, obviously, but that will only get you so far. So what else are we bringing to the table that's going to make this fundamental catalyst sort of injection to those SMEs to get to the next level? And we once had a very sobering panel discussion with a very successful entrepreneur who basically says, VCs think they give all the strategic guidance, but actually it's not really that valuable. We just want the cash and we just want access to markets, and that's it. And so that was something that we need to reflect on and see where can we really provide that type of support that's going to make the difference. And I think some of it is about helping to build out the ecosystem play, making those connections, making those introductions and collaborative partnerships, either within other investee companies, connecting them up, other corporate relationships, and also broadening out into other geographies. And that's really where we feel the innovation can accelerate further than it has already.
Thank you. Well, this entrepreneur has been extremely straightforward with you.
Absolutely.
The ones I meet are typically more polite. They know that I want to hear that they need my brain and intelligence and knowledge and networks and blah, blah, blah. They don't tell me that they want the cash only.
Yeah, and the thing is that it's because he'd been successful 3 times. But it was a useful phrase.
Okay, well, thank you very much. You're looking for companies that operate on growing markets. You're very careful about the market segmentation, market positioning in their very context, potential for scale beyond one jurisdiction, and team with a founder that's very strong at tech. It's a very clear set of criteria. Thank you very much. So Catherine, and maybe starting where Janice left it on support that the fund manager can bring to an investee. Could you tell us a little bit more about what you at Greenstone Ventures are providing your investees with, the cash and beyond, and maybe some views on specific challenges for African SMEs looking to expand beyond the continent, and how to support them in doing so.
Sure, thank you very much. As Janice was talking, I was thinking back, it's almost 20 years that I've been on the dark side of wanting to work with SMEs, and really the previous panel said, the guy said he has gray hair only because of SMEs in Africa. My surname's Young, but I'm no longer young because of SMEs in Africa. But it's just a fascinating journey, and I think so we worked a project back in 2012, where we worked, and it was with a multinational at the time, and the objective was to get 1 million SMEs digitally transformed in Africa in 5 years. And that was a massive task at the time, and how do you eat that elephant, a bite at a time, and we planned that project. And really what was very clear for me out of that project were 4 things, and depending on who you ask, it could be 5 or 6, but we know that the SMEs need access to money, and the money looks different depending on the life stage where they're at. We know that they need access to markets. I think Janice touched on that too, and the access to markets is the hard part. That's the hard bit once the investment's made, or once the SME's at a point where they now have to go, they've got product market fit and they have to just find those customers. Access to markets is really the hard part of it. Access to knowledge for those SMEs who really are just starting out and trying to figure out whether they build a business or whether they're actually looking for a job. Access to knowledge is important. And then, of course, access to networks and what we're doing here. We're very good as an ecosystem and funders to do this, and ecosystem players to do the networking. But the SMEs need to be introduced to the right level of network at the right life stage of where they are. And for me, I'm going on about the life stage because it's so important. We give, in the earlier years, I made many mistakes, gave the wrong SMEs the wrong advice to go where, depending on the life stage. And it's been very clear that as an ecosystem, we have a responsibility. I know as an example that if we have a specific deal for access to funding, that we can do a co-investment with Edge, with Janice as an example, or with Kate from Savant, we will be very sure. We have a saying, touch the SME once, meaning don't put them through the same program over and over and teach them the same things. Don't give them access to the same information when we can absolutely accelerate their growth. So those are the 4 things they need, and it's incumbent on us to make sure that when we address those needs, we do it in a very responsible way. I always think, when we talk to an SME, I'd rather say no quickly, and I'd rather say no respectfully than to keep them on a line, and because hope is absolutely not a strategy. So that's the first part of the question. And I think the other part of the question is, where can we help them internationalize? It's difficult for African SMEs to just go international for a various number of reasons. Culturally, yes, Africa is actually 54 countries. We always joke about it. Lions don't just walk the street. We joke about that. But the reality is that there are very many cultural nuances that we have to get the SMEs to understand, especially those who go over the first time. The other one is regulatory and compliance, and getting to understand if they want to register in Delaware or Amsterdam or whatever the case may be, what that is, what the costs are, what the implications are for that. And what we just do is very pragmatic, very methodical. We can't do it alone. We never do it alone. We work with an ecosystem all the time, and we try and pass the baton when we've done our bit to say, hey, this SME is ready for the next step, and really takes an ecosystem to raise a startup. There's an African saying, it takes a village to raise a child, and that's really how we feel about raising SMEs. It's all of our responsibility, and let's hand that baton. That's what I always say. Please, can we just work together? It's Africa as an ecosystem. We're just too small. We really are just too small. We should work together and help the SMEs.
Thank you very much. Thank you very much. Access to market, access to knowledge, access to networks. Don't teach the same thing twice. And if you've got to say no, say it fast. And pass the baton. Thank you. Mikir, let's speak about risk management. How do you see, what are, in your views, the biggest gaps in risk coverage for African SMEs? So to put it in a more positive manner, how can you help address these gaps so as to help African SMEs raise more funds and grow faster? And how can the insurance sector take a more proactive role in mitigating these risks in your views?
Great. Thank you very much, Jeremy, for the question. Look, let's take a step back slightly. There are millions and millions of SMEs across Africa. They are the biggest employers in our continent. Mm-hmm. Anything we can do to encourage and unleash their potential, we should do, because that's going to make the biggest differential to pulling more people out of poverty and into the middle classes and having a sustainable economic future. So it's really important we actually crack this nut. In terms of who we are, before I carry on, Africa Specialty Risk, we're an insurer and reinsurer, Pan-African. We have our own reinsurer in Mauritius. We have our own reinsurer in Bermuda. We're the first Lloyd's syndicate that's Africa focused. So they've never had one before. We are that one Lloyd's syndicate that's Africa focused. But we're not alone in our journey. We've managed to have partners, 6 international reinsurers who join us on that journey. We launched our business in 21, and we've de-risked investment into and across Africa, assets in Africa of $26 billion already. So we've done a lot, but there's a long way to go because we're only scratching the surface. If you think about SMEs, and SMEs can be tiny little kiosks all the way to medium-sized enterprises. So if you think about the whole range of businesses we're talking about in this one segment, that we've actually put into one segment, but they are all very different segments, and you have to look at them very differently. What do they all need? They all need certainty of cash flow to grow. So as an insurance company, what can we do to do that? So one of the biggest issues that we have on insurance and SMEs is the products that are available today in many African countries are very old products. They're not fully and wholly encompassing for all their needs. By all their needs is the entrepreneur or the businessman will take his business risks, but what about all those risks that are out of his control? His supplier's not paying him not getting any supply of the raw material to process or to make something out of. What about the fact that there could be a flood and that wipes out his own business? Where's that insurance coming from? So all of these covers are available. We have to make them accessible. So there's a lack of knowledge. So we do need to educate. So we do, as a business, go out, educate. We hold workshops across all the countries we operate in. And by the way, we've written in 50 out of the 54 countries. So we're getting close to the end of writing all of them. I think there's a few policies which hopefully, if they conclude by the end of this week, we'll get to 53 out of the 54. That will leave one country left, which will be Cape Verde, but we'll get there as well. But that shows that you can reach the market. If we're then talking about genuine cash flow, so we as ASR are about to launch a platform, an automated platform, which actually provides trade credit insurance. So what that means is when SME is selling a product, he's sold the product, he knows that he's given the guy, his client, 30 days to 90-day terms. Is he sure he's going to get the money or not? Our insurance product provides that certainty that if he doesn't get the money, we will pay that. What we're trying to do is get the banks involved as well and lend alongside. So actually, it's not his cash flow that's wrapped up. The banks are lending into the trade. Therefore, they're putting the money up for that. They'll charge interest for that. They'll make their margin. And we'll de-risk it. So he can use his cash to continue growing his business. Now, that is how we're going to see more rapid growth of the market that we're talking about. I think it's vital we bring this. We are already bringing that capacity availability onto the continent. The platform I'm talking about is fully automated. We'll be launching that in the second quarter of next year. And it's shortly about to go into user acceptance testing. And we're doing it across the continent. And we have that because I have been asked by a Kenyan spare parts manufacturer if he can sell a whole load of product to a Ghanaian chain of garages. He's never heard of that chain of garages before. He knows nothing about them. He doesn't know anything about the bank they bank with. And the first time we were asked that, I thought, this is what we need to be doing. If we can trade with ourselves, our economies will grow faster. We will build the wealth ourselves. We won't need anything else. And then the final part of all of this is, in order to grow, there will be a need for external capital. And we can provide that contract frustration and the political risk covers for the external capital to come in and help the SME grow, be it equity, be it debt. It doesn't matter which one. We'll happily help in all of them. And that's the real part. And that's why I'm here. That's why we, as a business are here, and there's a number of us at the conference, to explain that we can really help. We can help all the investors invest and de-risk some of that, but we'll help the companies that they invest in also grow faster.
Thank you. Thank you very much. Is this ringing for the end of the session, or is there time for questions from the audience? 5 minutes? Well, the previous group had up till 4:10. We're jealous. We should be granted 10 more minutes.
Yes.
Look, this room is really waiting to ask questions. Please. Any comments, additions, or questions?
Okay, so my question is for all of the panelists. Hi, my name is Ruby. Company is called Supiva, which is short for Supporting the Divas in Africa. My question to all of you is, how can we be truly innovative in terms of what we're doing for SMEs and what we're doing as an ecosystem? All of you talked about various different plays that you've worked on. The last speaker was talking about the de-risk aspect, which I thought was great. But there's two key hindrances and challenges that African SMEs, particularly WSMEs, face. Number one, cost of capital. When I compare the cost of capital in Africa versus if I'm an SME in Canada, no comparison what that cost of capital is. And number two, access to collateral. Many WSMEs don't have access to collateral because this is something that, their male counterparts have easy access to collateral, but women don't get that access to collateral. So I'd love to hear about innovative solutions of how we can really, truly help SMEs be really unlocking their potential. Thank you.
You mentioned de-risking. So actually what I explained was a way how SMEs can grow without collateral, without that much collateral. What's been holding African SMEs back is the cost of bank lending, as you've called it already. It's very expensive. And thereafter, the collateral they need when they even lend. if you have an insurance product, they're not providing the capital, we're providing the guarantee. Then the banks can lend at a much cheaper rate as a result of that. And that's what we're trying to do. We're trying to bring that infrastructure together. And our platform is innovative because it's automatically driven. It's not available for any other market in the world. It's only available for Africa.
Thank you. Thank you for your remark on the cost of. Yep.
No, you go.
Yeah, I'll just add a quick one on the women SMEs. We've realized, as you rightfully point out, that there's a bigger gap to fill. So we have gone a stage earlier, and there are really a number of entities who really want to solve for this problem. And by going a step earlier, there are a number of grants available for women-specific programs. You go earlier, you accelerate very hard, you work very hard, intensely with the entrepreneur as well as with the business. We do find that it's twofold. We've now run 3 different programs with female-founded businesses only. And by doing that, starting with a grant, then a seed round, then only a Series A, and a lot more support in the earlier stages, only because to make up for the gap that you've spoken about. That has really worked. I would say out of the 30 companies that we have taken through that process, I would really say 20 of them are truly still going for it. 2 of them did not make it, unfortunately. But it just takes a lot of time and effort and pragmatism, but it's possible. The statistics are very clear. Balanced teams, so not just male or not just female, balanced teams bring 2.5 times more money. Harvard Business Review from 2 years ago return 2.5 times more return than unbalanced teams. So it just makes economic sense as well. It's not a charity case, you know.
Yeah, and also to add. Particularly this program, FRP, will be focusing on women-led SMEs because, you know, we want to be intentional because we realize there are certain barriers that women-led SMEs will face that other businesses do not face. So that intentionality, and we, even in the previous program, those that created products and services, you know, financial products and services that actually targeted women-led SMEs, actually were able to unlock much more yield. So I think the private sector and financial institutions are actually realizing the benefit of creating products specifically for women-led SMEs.
Thank you.
Okay, just quickly, just on the cost of capital question, on some of the innovations that that we've done in the past and looking to do more of is in terms of blended finance structures, which is enabling through various vehicles to bring in concessional or grant capital, crowd in additional private capital, and then the overall rate that we're able to deliver and lend out to SMEs, or just the inherent rate of return that we're looking to do through equity investments is more manageable. And therefore we can sort of manage to deliver on a few outcomes simultaneously through those structures. And we have done one with the South African government called the Jobs Fund, which was able to deliver on that particular objective.
Thank you. 2 to 3 more questions from any of you. So we address them as a group.
Hello, my name is Peter Aberese from Ghana Exim Bank. I think you mentioned that you've created an automated platform for insurance for SMEs and what have you, and you are probably even in Ghana. If that is so, may I know how to locate you in your address?
Come and see me afterwards.
That's a rather easy one.
That's right. And we have lots of members of our team here as well. So.
Thank you.
There are none. I think just on the cost of capital, because it's a big elephant in the room. It's basically inflation, currency, and someone needs to give up. It's whether the investor or the board or the investee company. Here, if you want to decrease the cost of capital, there is no other choice than whether the private owner of the assets or the public owner gives away a part of the return that is purely on a financial point of view required to have a cost of capital met. And so you whether need cheaper insurance, whether blend finance or private individual or private money ready to have concessional funding. Except from that, I mean, you can turn the math any way you want to. That's the reality.
No, there is one alternative.
Yeah, I'm curious.
Insurance.
Tell me.
I'm sorry. Let me
Cheaper
explain
insurance.
No. Let me explain to you how it works. So when somebody's investing in a country, be it Ghana, they're really worried about the credit rating of Ghana. So therefore, I pick on Ghana because we have a Ghanaian who asked a question earlier.
And the currency in story. Yeah.
Whereas once we provide our contract frustration or political risk insurance on that product, it suddenly takes our credit rating. Now, if it's Lloyd's, it's AA credit rating. If it's our other papers, it's A rating. If it's us, it's A rating type paper. So then it takes on the cost of an A rating or a AA rating. And this is what I've been trying to promote everywhere. You can reduce the cost of capital by using an insurance product, which allows us to leverage the strength of our balance sheet. And in the case of Lloyd's of London, the Lloyd's market balance sheet of AA, or an Arch Re who's also joining us on the journey in Africa, which is also AA, or a Unica Re, which is an A-rated company from Switzerland. Suddenly we're transferring the quality of that credit to an A rating or a AA rating. And that reduces the cost of the loan.
All right. Thank you. Thank you. I think that's the final ring. Thank you all very much.
Thank you.
Thank you.
Thank you.